What's up, gamers? I hope you're all doing well and taking showers. Listen, with all the uncertainties going on in life, one thing is certain: the grind never stops. That is why we're here today, to talk about generating passive income and, in particular, writing covered calls to generate passive income. So stay tuned till the end of the video. The stock market can prove to be a highly profitable trade and can be a perfect place to invest if you have disposable income to spare. People all around the globe profit thousands of dollars from this. But before getting into this one, we should be well aware of its pros and cons. Writing a covered call is one of the many stock market strategies to benefit from for generating passive income. And if you're looking for investment ideas, you're in the right place. So, in order to generate passive income from a covered call, we need to first understand what a covered call is. Consider that you have bought 100 shares of a particular company at a price of $5 per share, totaling your investment at $500. Now, to generate an income from them, you do not sell your stocks at a higher price to another person. Instead, you only sign an agreement called a call option. You sign this agreement with another person to potentially sell your shares at a particular price of your choice, which is usually set higher than what the stock is currently trading at. But bear in mind that the buyer is not obligated to purchase the stocks, as they are just reserving the right to buy them at the agreed price on the expiration date. Now, upon signing the agreement, the person who buys the call option pays you a fee called a premium, which is yours to keep regardless of whether the buyer exercises the option or not. You should be aware that you are the seller here and collect this fee, which varies. Like the better things in life, this agreement doesn't last forever and has a time limit for which this agreement stands valid, also called the expiration date. If the stock price does not end up being at or above the strike price you chose at expiration, then you keep your shares and the premium. This is the whole strategy. The goal is to keep your shares and continue to write covered calls each week or month depending on what equity you're holding. So, pertaining to the example where we bought 100 shares, you could only write one contract. Obviously, the more shares you have, the more contracts you can write, generating more income. There are many upsides of using the covered call strategy. One of them being that you receive the premium on the date a call option is signed. In addition to this, if the actual price of stocks reaches the strike price, then the call option is exercised and you'll profit from selling your stocks at a higher price on top of the received premium. Also, selling a covered call actually lowers your cost of buying a stock more, so you can gain profit from your stocks even if they are trending sideways and you're waiting for them to rise in price. This strategy is more useful to generate a passive income as it is low risk, but I wouldn't hurry so much to invest in this strategy, as this strategy, just like others, also comes with a catch. As I've told you pros of using the covered call strategy, I find it crucial to let you know the various downsides of investing in this strategy. Above all, if your stock increases in price and goes above the strike price, then you won't be able to fully profit from your stock, as you'll be bound to sell it at that predetermined strike price. But to be really in a tight spot in a given scenario, if the stock starts a downward trend and you decide to sell your stocks, you'd have to buy back your call option before you can sell, which can further increase losses on your portfolio. So, to sum it up, writing covered calls can prove to be profitable if you know what you're getting into. I hope you've learned something about covered calls and hopefully will begin utilizing this strategy to generate a passive income. That's it for today, guys. Tell us in the comments below what you guys think about generating passive income using covered calls and what other strategies you use. Don't forget to like and subscribe. We'll see you in the next video.